Okay, and we are live. How's it going, Roy?
It's going good. How about you, Tevis?
Just running around, man. Let me fix all this stuff now.
Probably the best thing about today was that I was super, super busy after the open. Didn't have a chance to look at the markets. On a day like today, oh man, that is awesome. So, did you? I'm assuming you looked at your portfolio. Did you? Are you down a little bit today too?
Yeah, I definitely
Yeah.
did look at my portfolio, and I am down more than a little bit today, but it's fine. I mean, that's how it goes.
Yeah, it was it was really interesting. We're going to talk about, of course, what happened, why it happened, what we're expecting, what we're doing, what we're not doing as well. This, guys, if you're new to Bootleg, we have several different topics we're going to go through tonight, and then after that, we'll have a Q&A period. If it's completely unrelated to what we're talking about, feel free to ask a question. The worst we can do is just ignore it, but likely we'll give you an answer, even if the answer is I don't know. What we're looking at tonight, of course, is the tariff in Denmark stuff, which is impacting the market massively. How we expect that this might resolve. We're going to look also at AI and consumption and demand. There's a little bit of nebulous stuff in there. Gemini, OpenAI, and Anthropic news. This relates to some of the names that we hold and some of the names that we're looking at as well. Maybe briefly, we'll touch on the 24-hour trading stuff from the New York Stock Exchange. Certainly, I know, Tevis, you and I want to talk about Tesla, RyanAir, Elon Musk, and we may want to also touch a little bit on Netflix earnings and a few other topics as well. So, Tevis, where do you want to begin?
That's a good list. I think there's a lot of macro chat that we have to do in this particular episode. Yeah, exactly.
Yes.
Taco Tuesday, except not yet.
Yeah, I was hoping for Taco Tuesday. Not yet, but maybe next week. So, and yeah, Spicy B, he said, can you guys talk about how Mag 7 is breaking down so far this year? It really is. Like, if you look at the heat map, let me pull some of these things up, and then we'll share my screen here. Give me 1 second. Evan posted an awesome heat map. Shout out to Evan, Stock Market News. And I'll just use his because why reinvent the wheel? It was really interesting to see like some of the names that were down and how much they were down. It does remind me a lot of April of last year, of course, Liberation Day, so-called. Now, out of a lot of these stocks, you know, I don't own them other than just like the broad index funds that I do have some of my holdings in. But, you know, it's not every day you see, well, Broadcom's a little bit more volatile than NVIDIA. And you can say, yeah, down 4.32. It's down more after hours too, or it was when I was looking at it earlier. Broadcom is down 5.5 almost. Apple is down 3.39, which is a big move for Apple. Amazon down 3.35. Google down just 2.5. Tesla, it's high beta. It's not too surprising. And of course, Meta. And honestly, you know, a lot of the gains early that we started in the year, just the first couple of days, have been completely erased. And it can be a frustrating thing, especially depending on what you're holding. You can also see consumer defensive. Oftentimes there was a rotation in there when there's some uncertainty. Those did quite well today. Some other spaces fared better than others, but yeah, largely a lot of AI names were hit. And what's interesting is there was a lot of small cap, micro cap stuff that I'm either in or I'm looking at that did quite well today. So, on this, Tevis, any like before we talk about the tariff stuff, any surprises like in your portfolio of how something performed either really poorly or really well today?
Well, I don't know. We had a sort of bleed into the end of the day. I was surprised that SoFi relatively held up because generally speaking, like it does tend to sell off just as hard. But yeah, I mean, no real surprises. That was grades at NVIDIA ended up down over 4%. I found that really interesting.
Yes.
Air finished positive.
Yeah.
Microcap. There's a bunch of like international names too that were like I think New was also up today. I think there was a bunch of names that were like surprised. Duolingo was up today, even though it was like crushed, you know, for the last however many months. Netflix was up today, even though it got crushed after hours, which we'll talk about. But yeah,
it was, you know, it felt the same on the front end as far as like the large cap and the way it was impacted by the tariff stuff, just like what happened back in April. Although not as pronounced. Now this is day one after all that stuff. Yeah, there was a lot of names that sold off that you're like, oh, that's not too surprising. SoFi, by the way, market was closed yesterday, Martin Luther King Jr. Day here in the United States. And as a result, we could just follow the action, very light trading internationally. But SoFi was one of those names that had lost the most. Now, it's meaningless as far as, that completely changed, but that surprised me. And then there was like some small and micro cap stuff that I'm not even necessarily in, like drones.
Yeah,
just continue to be popping off. And a lot of those stocks that have done really well this year continue to do pretty well today, or at least didn't sell off nearly as much. So Palantir was also one that held up for a little while. It was green. So you ended up finishing 1.42% down. So it's just one of those where regardless of what's happening in the macro, it's just a strong company. BM&R, what did you think of the move?
Yeah, man, I don't know. I don't know. It's do they have like an office in Greenland or some shit? Like, what the fuck's going on, dude?
Yeah, I think that Trump is threatening to invade BM&R or something. I don't know, or like delete Ethereum. I don't know. So it's not too unexpected that we would see some selling pressure. BM&R, like, I need to look more into. We need more data points. Honestly, we just need more days, a little bit further removed from the actual investor day. I shouldn't even call it that, but the presentation that they had that was quite a debacle in Vegas, just to see if there is just people that are like saying, hey, you know what, I'm out. Like if liquidity starts drying up, that's a real concern with BM&R. But yeah, I was a little bit surprised it was this far down. I was expecting, 5, 6, 7%. But I mean, if you include after hours, it's down more than 10%, almost to all-time lows after the announcement that they were pivoting into digital asset treasury. So we'll have to see.
Yeah, I think with regards to BM&R, like, did you see their announcement today, actually, Roy?
No. Well, do you mean the morning announcement, the breakdown of like what they bought and the liquidity? Yeah.
Yeah. Let's just go there. Let me cover that real quick.
Yeah.
So yeah, they released their update for January 20th, which is today. 14.5 billion in total crypto and moonshots. They're back up to 979 million in cash, or I shouldn't say back up, but I mean, like, they absorbed the Mr. Beast 200 million thing and still have $1 billion. And then this was their weekly buy, 35,000 ETH tokens, so slightly up from the previous week of 24,000. Still remaining fairly low. And I think the thing with BM&R is, like, if we keep seeing it depressed in these levels, it's just going to really hinder their ability to keep stacking ETH, right? Because they must be below 1 MNAV right now. Absolutely must be.
Yeah, I would say.
They mentioned that they've never, hold on, I think it's here for, they shared the results of the vote. I don't know if you saw this. And they also said, like, hey, we've never, here, as we have stated multiple times, we have not nor intend to sell shares below MNAV. Great. Yeah. I love that. Thank you so much for that clarity, genuinely. But now that we're down so much, how are we planning to continue to stack ETH if you're going to stay below MNAV? So I think that's like the main question. They're continuing their staking. 1.8 million ETH is staked, 581,000 just this week alone. So that's all good. It's all well and good. I mean, they're still doing their plan. I guess my main question is, like, let's say we sit in the, let's say we further deviate away from Ethereum in the short term. Do we just see no ETH purchases over that time, or what happens?
Yeah, I mean, like, if they end up, there might have been, like on Sunday, that they bought some that they were still above MNAV. Yeah, I agree. Right now, like, there's no way that I can see that they're above MNAV. So if they come out next week and it's more than like 10,000, and this trend sticks or continues this way, I'm gonna have questions. As far as like how, like, cool, that's awesome that they're not diluting, and I do agree with you. Like, it's great that they reiterate that time and time again that they're not diluting below MNAV. But yeah, my big concern, Tevis, from the event last week is that a lot of retail would say, you know what, I'm getting out of this. I don't like the move from Mr. Beast saying, I don't like the bait and switch. We talked about it all last week. I'm not going to, well, I guess we didn't. We on here. Well, we did. Yeah, Friday. That's right. We had our bootleg on Friday. Short turnaround. So I won't rehash all of that. But if that impacts actual liquidity, there's a reason why every single week that they say it's the X most traded stock on the New York Stock Exchange. Doesn't need to be top 10. I believe this last report was 60th, which is okay. But if they're selling into that liquidity, they need a liquid stock in order to really benefit materially from being able to do that. But we'll have to see how that goes. Too little data. I think another week or so will probably give us the read that we need. But yeah, especially with the macro today, it's hard to just say, okay, is this just macro and people being risk off? Because certainly that is happening with crypto. Huge flush on Bitcoin as well. And of course, all crypto names typically when Bitcoin hits. So yeah.
Yeah, I think it's all a matter of attrition, right? Like how long can they feasibly stay under MNAV and continue their plan? If they, let's say, are under MNAV for a week or 2 weeks, that's not the end of the world at the end of the day, right? Like they can still accumulate Ethereum using their cash on hand, even though they've chosen not to for this time. Like they can buy 300,000. They got $1 billion. ETH is at $3,000. They can buy roughly 300,000 ETH with just cash on hand if they wanted to. So like if their run rate is, let's say, 30,000 or 40,000 ETH a week, well, hell, they can stay under MNAV for like 10 weeks and still maintain that, 30,000 ETH per week run rate. And if you think about it like that, then it's like, okay, well, I'm not really concerned. But the question is, are they going to use their cash? And it, like, strategically, what does that look like?
I'm pretty confident that it's there just as a hedge in case it heads further in this direction, negative MNAV. And then they'll report next week like, hey, we bought back this amount of stock. There's a few other contingencies that they can do, such as selling orbs, but in their 193 Bitcoin, that's relatively small, given their market cap size too. But they don't want to be like ETHZilla, like SharpLink Gaming, and like the others that ended up falling under their MNAV. They had no cash to do anything with, and as a result, they're just kind of stuck in the mud. So, of course, as they are staking their Ethereum, they'll have some routine gains that they can use to put against that to buy back the market cap. But I think they're going to keep that number around $1 billion. It's a little bit under right there as of the report today. But also, when they get close, and they're pretty close, we're 70% to the goal of the alchemy of 5%. I think that whatever cash they have, they'll just send it over that mark because, that'll be an exciting day, frankly. That's why we're here.
Tom Lee posted today, with the cash, they're like 74, 75% if they were to, blow the entire cash pile today. But I think, I don't know, can you do cash? Maybe they have an interesting way to do cash secured puts on Ethereum. Or this is what I'm thinking out loud as to like, why would I need to maintain a big portion of cash? And how can I get Ethereum under market price? Cash secured puts. Like maybe that's an overly simplistic thought process, but I wonder if there is something that can be done from that front as to like, okay, well, they don't want to spend cash. Okay, why? Well, it's either to build a further buffer just for security, but they have no debt and they have no real burn. So, okay, and they're getting staking rewards. Okay, so maybe not to build that big of a moat. Okay, for acquisitions, maybe, sure, maybe. Or they're leveraging that cash in some way to potentially get cheaper ETH. And I don't necessarily, I'm not smart enough to understand how you would potentially run, cash secured puts or something, or even if it's possible in the first place. But that's just the only thing that is coming to my mind just as I'm thinking about it in real time as to why they would want to keep that much cash on hand in the first place.
Yeah, just gas to use. I used the analogy like really early when I got in the BM&R play, and I talked about why it was differentiated from the others. In part, it was that the others just were like speedboats that race out into the ocean, expecting that things would be favorable all the time. And when they sunk under MNAV, they were like that speedboat that ran out of gas. They didn't have any backup, any contingency, and so they were just stuck. And they've had to do painful things like ETHZilla. We've seen a couple of times where they've taken Ethereum and they've sold it. Now, Ethereum or ETHZilla, it bounced back their stock some, but like it's not really helped them long term. For BMNR, I think that would be like the nuclear option, basically. If your stated goal is the alchemy of 5%, then you doing anything that takes you away from that goal by selling Ethereum, yeah, a lot of people would be like confused, frustrated, not like that. Even if, but there's a point where they would do that. Like obviously, if for some reason this, I don't think this should happen, but let's say hypothetically their market cap versus where Ethereum is, so that the Ethereum is worth 20 times the amount of what their market cap is. I mean, they're going to sell some Ethereum and buy back their stock, and that'd be a really accretive thing for shareholders. It's not going to get to that point, but there is a point, and I'm sure that there have a framework of where they're comfortable with actually doing that, but it's going to be much lower than many of us expect. Like half of MNAV, I'm not sure that they even do it there. So they want that cash for that flexibility. I do think that they'll sell Bitcoin and they'll also sell orbs when they need more cash also for that. And then after that, they're kind of stuck.
Yeah, that's a whole idea. I mean, look, I think I agree with Matthew's, comment here. They could buy somebody else that's like, if I'm 0.9 MNAV, let's say, and I have an acquisition target that's 0.3 MNAV, financially it would make more sense for me to buy them, because even if I'm diluting myself, right? I have to think through that. But like, I'm trading under the Ethereum value, but they're trading way more under the Ethereum value, and they hold Ethereum. And so I could see that also happening, where they say, hey, look, we're going to proxy acquire Ethereum through an acquisition of SharpLink or ETHZilla or whomever. And I think that would be perfectly within there. Like, I would have expected that to happen way before the Mr. Beast thing to happen, quite frankly. But it's going to be interesting to see, where this trades at, because Ethereum fell. It's down 8% right now, and it's at 2,900 for Ethereum. So BMNR to be down 9.5% and another 2% in after hours, I think obviously decouples them even further from the MNAV.
Can you throw up Mike McDowell's comment at 617? The issue here is, they have, I mean, 50 billion is not infinite, but essentially infinite amount of ammo. But they have stated a number of times, and I wouldn't have invested in them, frankly, if they weren't operating by this, that they will not dilute under MNAV. So basically, if they're trading under the value of what their Ethereum and their other holdings are worth, and including cash, they do not dilute, because that is dilutive. That's not good for shareholders. Versus if they're trading in a premium, and for much of this time they have, that's when they dilute. So having 50 billion shares where they've said, hey, we're not going to do it under MNAV, which they almost certainly are right now, that means they can't touch that ammo. That ammo has to wait until really Ethereum pumps, and that's why having that cash is so important.
Yeah. We know that they issue shares to buy Ethereum. And so if they're trading at a discount to Ethereum, every share that they issue to buy Ethereum, you're losing value. You're essentially like buying dollar bills, and you're paying, $1.10 for.
All right, let's talk about the macro now.
Sure.
BMNR certainly got stuck in it, and it's easy to get stuck in those topics as well. But I mean, I like picking your brain on that. You see some things from a different angle. So this, of course, is not brand new news. This was announced initially, the whole Greenland stuff, right after our market closed on Friday. So we've had a long weekend for things to process, which didn't help out maybe the most over this weekend. But President Trump imposed 10% tariffs on a bunch of allied countries. Tariffs will supposedly increase on June 1st. And then there was a bunch of retaliatory tariffs as well. Part of this I thought was really interesting, was the Danish pension fund, I don't know how to pronounce that, announced that they will sell all U.S. treasuries by month end. Like, no, it's not because of Trump. It's just because of credit risk. And there's maybe something to that. I think maybe we'll save that clip for just a second. And there's some that think, that Trump is playing 5D chess, basically trying to get NATO to step up and actually increase their military spending. So there's been a lot of topics around that, and a lot of commentary as well. So here also, EU capitals considering hitting U.S. with a 93 billion worth of tariffs or restricting American companies from blocks markets in response to Trump's threat. So, Tevis, it feels like we've kind of been down this road before, although it's a little bit different than April. Is this? Are you like how different do you think that this is from what we saw last April, and how do you think that this actually gets resolved?
I think it's like one of those boy who cried wolf situations, right? Like, I think there is a feasible end to the flex allowed by Trump. Like, okay, so I don't want to get too into politics because that always pisses a couple people off. But I think there was definitely wiggle room in terms of the U.S. flexing their position that hadn't been leveraged before. And then Trump came along and he started leveraging it and he started flexing, let's say. But what's different now versus April is in April, it's just like, hey, I'm going to reset the game, right? Everybody is going to get a tariff and that incentivizes you to make a deal.
Mm-hmm.
Okay, great. Then he went into Venezuela and he's like, oh, we're going to take their oil. Okay, great, fine. And now he's like, oh, we're going to take Greenland. And then there's like, talking about plans for Canada as well. And at some point, there's one of two things that happens. Either the tariff pressure is so big, and in fact, these other countries are so weak that they have nothing to do in retaliation, or you're going to piss off all of your allies and you're not really going to have a lot of allies left. And I think the way that he's playing the game is somewhat reckless because he doesn't necessarily treat his allies like allies. He says like, oh, like I saw Chris Patel make a post and he was, essentially critiquing Trump for saying like, hey, like these like Danish soldiers fought alongside the U.S. multiple occasions. Like, why would you do them like that? And so I think it's really like he's pushing the limits to see where the limits are, and that rubs people off the wrong way. Now, you could absolutely argue that, this is his, this is his stance, where he was basically saying like, hey, these guys haven't carried their weight and we've been carrying their water for a long time. And this is now time for us to take what we're owed. And that I think is a fair stance as well. It's going to hurt the geopolitical relations, but it's also going to hurt the markets because it's introducing more uncertainty. And that's actually interesting. Do you have the Dalio clip that I sent over? So at Davos, everybody's at Davos right now, and Dalio, he was basically saying, look, man, in so many words, and we can play the clip, but he was basically saying in so many words, he was like, there comes a time where you have this counterparty risk, essentially, where people realize like, oh, the U.S. is not a reliable trading partner. And this is not a country that we view as a serious, counterparty to do business with. And as a result, the retaliation could be that they just sell off the treasuries or the U.S. debt that they hold, and they stop doing business altogether. Can they afford to do that? Probably not. But what's the long-term outcome here, right? Like, what is the long-term? There has to be a baseline level of trust for me to transact with you on a regular basis. I have to trust that you won't, turn around the next day and screw me. So I think that is broadly getting tested. And basically Dalio is saying like, hey, like, this is breaking down. And the solution is you got to own hard assets. You got to own gold. You got to own Bitcoin. And because you can't necessarily own debt because these things happen.
Yeah. And it's definitely been more precious metals than crypto at this point. But yeah. So my 2 cents, I won't talk much on the political side of that, other than just saying, just like April, I didn't appreciate the tactic. And especially against allies, I think that it's pretty disrespectful. Now, are there things that need to be worked out in that relationship even before this, absolutely. But yeah, and as far as Greenland, it's just weird. But the timing is very intentional, of course. Coming up very soon at Davos is a World Economic Forum. There were multiple tweets exchanged about that, some posts by Donald Trump, some by other world leaders as well, as far as meetings happening or not happening. Sounds exactly like what happened last April when there were on again, off again. Yeah, we're meeting and we had a favorable discussion, productive discussion, and the end result's going to be great and amazing. And then we'll know actually that's not the truth and this and that. And then eventually things got worked out. The difference this time, Tevis, is instead of let's tariff everybody in the world at the same time, which maybe not the best tactic. It's a specific region. Now these are allies, but I mean this was the same group that was hit back in April. There's I don't know. It's hard to know like if how serious he is on Greenland. I think he's pretty serious. Trump is probably wanting to cement his legacy. I think it's one of the reasons why he's complaining about the Nobel Peace Prize, that he likens himself to somebody like a Teddy Roosevelt, who ended up brokering a major peace agreement, winning the Nobel Peace Prize, and is enshrined then on Mount Rushmore, or some other presidents as well that ended up getting massive land purchases, but not always purchases. You guys know what I'm talking about, as American citizens, and cementing their legacy that way. So I don't love that, but I think that this resolves kind of the same way that, there will be some noise over the next, it might be some weeks. It might even just be a few days. I think things do get worked out. I don't think the United States is invading Greenland or we're going to war or breaking free from NATO or anything like that. And probably most of this tariff stuff gets negotiated away too. I have seen some interesting counter moves by the EU, which have led to more open trade with other countries around the world, maybe as a negotiating lever against the United States. But I'm kind of curious if that's actually what the end result ends up being, where there's just like free trade between the United States and EU, or at least more so. That may be the goal. I don't know. The goal might also be to increase NATO spending. That might be why we see some of the drone stocks and even Palantir do pretty well. I didn't look at the pure defensive sector plays, but I imagine they weren't too shaken up by this either. So, yeah, I would guess, it's just a guess, that maybe by the time the government shuts down at the end of January, we'll at least be through this hurdle. But the thing is, I guess one more reminder, like if you guys are like fairly new to investing, Tevis, I know that you're not. In a bull market, we have what's called the wall of worry. In every single bull market, every single one, no matter how good you look at the stock price movements and everything, there are always things in the macro, always, that the market will worry about briefly, and there will be a pullback or there will be some concerns, and then the bull market just keeps going until, of course, it's time for a bear market. I have been on record since 2023 that I don't think that we get a bear market. Now, we came close last year until maybe 2029 or 2030, just because of some macro things in AI and robotics playing out. We'll have to see. Only time will tell. I'm not Nostradamus, so yeah.
Look, it's interesting. I mean, look, if I wasn't affected by the markets, I think this is a brilliant, case study. And there's so much to pick apart here for discussion and debate, and ultimately, how you have the great rise and fall of a certain company, and you're like, oh man, this is going to be a Harvard Business School case study one day. Like, I honestly feel like we're living through that, one of those for geopolitics, because if in fact he can pull it off, let's say, and he does manage to buy, Greenland, or he does some other move, it's just like, dude, regardless of where you sit across the aisle, what side you're on, the achievements are going to be crazy. But the level of risk that he is taking for that is leaving a lot of people unsettled. Like, he's definitely playing the game like they can just reset and just start a new round, So
yeah. I just hope there's not permanent damage or like massive trade walls. I mean, that's not good for anybody. The Europe or ourselves, we need allies. If Greenland is acquired legally and fairly, great. That's awesome. I'm not opposed to that at all. One of the funniest moments of this, Tevis, is, some people were calling me ignorant. And there's many things I'm ignorant on, frankly. But on like our history and purchasing Alaska from Russia, and they were trying to educate me. I'm like, I was born and raised in Alaska. We're required to take Alaska history. I'm well aware of Seward's Folly and Seward's Icebox, the date of that, when Alaska became a state, 2.5 cents per acre, all the stuff going around. It's like, yeah, I know. It's not the same though. In that case, Russia wanted to sell Alaska to us, and it was an interesting timing because you look at it in the proximity to the Civil War, but nevertheless, ended up being a very accretive purchase. Greenland probably would be as well. I just, don't want to go too far in the politics, but
it's honestly like a reality TV show playing out in real time, because like, oh, Katie's asking with what money? Katie, they just print the money. Like, this is what happens when you have the world being backed by the US dollar, right? And I think this is part of the reason why he wants to continue sort of this expansionary type of policy, this very aggressive way to play the game, is because he wants to ensure that the US dollar continues to be the reserve, right? And I think with regards to Greenland, like, I don't know. I think neither party wants to ruin relationships with the US. Whoever's in charge, regardless of the politics, like, it's a massive trading powerhouse. And I think that allows him permission, or at least in his mind, it allows him permission to play the bully a little bit and move his weight around, because at the end of the day, however much he will sour relations with our allies, somebody else might step in years from now and those relations will get mended again. Or they might grit their teeth and they might continue to do business out of necessity with the US because of the size, and they can't, like, it's mutually assured, like, not mutually assured, it's like, it's a symbiotic relationship. Like, they need each other. And so is he taking advantage of that fact? Quite possibly. Can he take advantage of that fact? Well, we'll see to what extent, I guess, in the coming weeks.
Yeah, in ZW 5000, he mentioned it right there at 633. It'll have the opposite effect when Europe, maybe not just Europe, starts selling our bonds. I mean,
Also,
China holds a number, Japan as well. That even the little bit from the Danes, like, you can see the treasury yields rising. That's not a great thing. We have a massive amount of debt, and we benefit immensely from having the United States dollar as a global reserve currency. So, any last things on this, Tevis, and we can pivot over to AI data centers.
Maybe let's just very quickly, 30 seconds. How do you think this will resolve? Make a prediction 6 months from now, and then I'll give you the same thing.
Probably less than 6 months, more like 2 or 3 months at the latest, I would expect. We're going to see Greenland not be purchased, but instead see that this is, it ends up leading EU to actually increase their spending as far as NATO, which has a lot of ramifications on a lot of interesting names that are in the space. But also that we see some of those tariff walls drop a bit more as well. So I think that those are probably the two main goals. But I mean, I don't think he would mind having Greenland. I think it's just more of a negotiating lever. And I do think that that's probably more like a 2-month type of thing, maybe 3. Greenland should be tokenized.
Yeah. So I do think that he will make some progress towards Greenland. I think there will be some concessions. I don't necessarily know if it's going to be like a full state or territory or whatever, but I think there's going to be increased US activity permitted by Europe in Greenland. Maybe they make a joint whatever to have military bases in Greenland or something like this.
We already do.
I mean, like an increase in the spend. But I think Europe is going to make some concessions because they can't afford not to. And I don't necessarily know how long Trump can afford to keep this going as well, with a shutdown looming and midterms and all these other domestic problems or issues that are going to come up in the next 6 months. The other interesting piece, Roy, I don't know if you saw this. I just want to stay on this topic for just a few more minutes. Is so Today, Canada ran drills. They're doing like defense drills, and they publicly came out and they said we expect our defenses to fall in a matter of days. I think the expectation was 2 days, and this was in CB, like our biggest news whatever, partially subsidized by the government. And I was like laughing at this, the fact that they voluntarily, I guess admitted is not the right word, that they voluntarily presented this assessment to the public, because I remember, when Russia invaded Ukraine, they were flexing at the fact that they were like, oh, it's going to go down within a week. And this is like the opposite. Like, it's like if Ukraine was like, oh yeah, we'd fold in a week. And it's just kind of funny, especially because I get a couple of questions around the recent deal that Canada did with China. I don't know if you heard about that, Roy.
I did, yeah. Yeah, the automaker stuff.
Yeah, so the idea is that our government decided to go and cozy up with China, and Chinese vehicles are now, and I think Tesla is one of the main beneficiaries. Like, immediately, Tesla is starting to take advantage, like Tesla's made in China, and I don't think it's going to bode too well with the U.S., especially because the numbers don't make sense. Like the amount of business we were doing with the US versus the amount of business that we're going to do for China, and how much it's going to hurt the actual auto industry in Ontario is going to be crazy. I think it was totally a sort of propaganda type of move, like it was a publicity thing. But I think it's a little bit provocative in that sense as well, where if he's actually, and we can talk about ulterior motives, but if Trump is actually after Greenland for national security, well, all of a sudden you have this massive, however many thousands of miles border where they're cozying up with China, and they're bringing in Chinese products. And it's just, I found that pretty funny, especially because, did you see last night he posted this picture on his Truth Social, I think, with a map, and it was just like the US flag over Canada and Greenland.
No, I didn't see that.
Yeah. So, like, this is something that is actively going on right now. And so you have this like sort of like propaganda back and forth. So yeah, this was posted at 1 a.m. last night. And he has Venezuela over here. And then he has Greenland and also Canada.
That is, I mean, I that's funny, all jokes aside. But
this is, of course, AI, because this is when all the leaders sort of came, and he just added this. But I mean, he's not making it subtle, that's for sure.
So, I mean, kind of related, like going back to the market more than the macro and everything. One of those major themes that has emerged this year has been drones. Part of that was Venezuela and how they were utilized there. And so a whole bunch of drone names have run. Some haven't run as well. And I think that they have continued to run, Tevis, in part because of this. I mean, we'll have to see how it plays out, more than just, we need more than a day to actually see a trend. But if things work out the way that I expect, and then the EU, for whether hopefully, willingly and happily, they increase their NATO spending, a lot of that investment, just because of what's happening in the war between Russia and Ukraine, and with the Sahib drones from Iran, a lot of that spend is going to go not towards more tanks, and I mean there's some of that for sure, and jets, but a lot of drone stuff. And so there's a lot of beneficiaries. So I think right now there's names that I've been researching, and one in particular I bought a little bit today, and it ran quite well, like most of the drone stocks. But I think right now, like if there's a name in drones that you're really interested in, take a close look at what's happening. Take a close look at that name. I mean, there's pretty much every single drone name is risky, by the way, just because they're not profitable. They're very new. They're micro caps. Just be careful. But I think there's an opportunity there. You're muted.
I don't disagree. At the same time, I don't know how many new positions I can afford to start right now. I do want to build up into my area position. So I'm going to be putting away some money into Air this week, even though it's not even freaking down. I wrote more cash secured puts on Nvidia and on Nebius today, Roy. So you'll be pleased to know.
Oh, nice.
So
yeah,
the moment I was unwinding from margin, I was like, oh man, this feels freaking good. We got to pull back, and I was like right back into it. So
yeah. I mean, I have a little bit of margin, which I normally don't do, but I'm up like 50%. Where I not quite, but almost because of Air. So that worked out okay. But yeah, Nvidia is looking really attractive here. It's been looking attractive, but it sold off a lot today. I would have expected, like, if going back to our like very initial conversation real quick, it's Air does move on its own catalyst sometimes, but largely it's what's happening in the space. And so if you had told me, hey, Nvidia at one point is going to be down 4% plus today, like, well, Air is going to probably be down 8 to 10%. It's up. And there's some reason, but a lot of it is also like speculation at this point. So yeah, I'm glad I got the position that I want. But you're right, like you can only have so many positions, being only so many things. For myself, like my drone plate, I'm in the invest and investigate phase. So if I end up making that a position, it's going to be maybe like a 2 or 3% sizing in my portfolio, just because like those high risk, high beta stocks, if they're very speculative, and maybe for some like Air is, for me where it's at, it doesn't feel speculative. Balance sheet maybe, but if you speculate like that, if you do a whole bunch of it, it's going to destroy your portfolio. But if you like take something like, let's say from a few years ago, DNA was one of those that was a very speculative one that a lot of people were pouring into, performed terribly. And so if you had like 10 or 15% of your portfolio in that, you got killed. If you had 1% of your portfolio or 2%, it kind of stinks, but I mean, it's 1 or 2%. But with those high risk, high reward plays, you can also invest like 1 or 2%, not a huge, this is the way I work anyway. I'm not giving financial advice here. I guess you could throw up your not financial advice thing. But if you invest 1 or 2% and you get it right, I mean, that might be a 10% increase in your portfolio, maybe a 5x. So weight according to risk and according to comfort. And even if like you're like, hey, Nvidia for me and where I'm at is a high risk name, well, weight it accordingly. You can view stocks differently than Tevis and I do. So, but yeah, I'm glad to hear you're getting more into Air. So another stock that is a new position for me, and thankfully it's built out. Yeah, Matt. Yeah, get you a starter pack of Air. 100 shares there, brother. I bought this stock actually because of Matt, and also others as well. Well, it's related to this. This is from the Kobayashi letter. U.S. data centers will consume nearly 10% of the entire U.S. power grid by 2030. This is 4 times the percentage seen in China. We need more power immediately. And I've been, over the last almost a year, I've been doing a lot of research in this. I'm not an expert in this field. That's why I have to put so much in. And I knew I wanted an energy play. And I was like, man, solar, I don't know. Nuclear already run. And so LNG was one of those. And so VG I got into after talking with Matt and many others and doing my own due diligence. And a lot of it is around this massive energy demand. Now, there's efficiency gains that will happen. There are other forms of energy as well that we're accessing. But man, does this just surprise you, Tevis, to see this massive rift between the United States and the rest of the world when it comes to data center electric consumption?
I think that's like the same chart, like in many different aspects. You can look at it in terms of growth. You can in terms of build out expenditures, in terms of military defense, and whatever you want to look at it. Like I just think that, and like this is one of the posts that you shared around the 5D chess theory, around like maybe he's just poking at the hornet's nest to get them to wake up, but I'm not surprised at the data center electricity consumption as a percentage of total. And it's interesting. So a bunch of people were asking me what was going to happen with the Missouri decision around Nebius data center. And we actually got some news around Birmingham, Alabama for that data center. And the city council was pushing out the vote by like 6 months or something, because there's now this like reluctance around, maybe it's a little bit of NIMBYism, I don't know, but a reluctance around this build out. Um, Maybe it is the what do you call it? The Bernie Sanders. We shouldn't be building more data centers until we can have ethics around AI or whatever the case may be. But there's a fear right now that Missouri, for Nebius at least, might not be approved at least. And I think it's tabled for tonight. I think it's pushed out to the beginning of February.
Oh, really?
Yeah,
Okay.
yeah. So I saw that Gen Z Investor had posted about that earlier today, and I was thinking, okay, we'll absolutely have this because the open house that they had and the plans and whatnot, like this is all fairly positive. But that's the thing that got me a little bit not worried, but yeah, a little bit more muted on that issue, especially when you look at a chart like this, right? Like data centers are growing rightfully so because the demand is there from the other side. And on the other hand, it's just like you see regulatory hurdles, you see this being a politicized issue, you see all of these things with regards to the build out. And you can take that however you want. But for me, like it does make me very bullish on owning, a company like Nebius because I know that the supply constraint will continue for longer and the demand will far outstrip it years into the future.
Yeah, that's the nice thing about something like this is, I can look at this and be like, oh man, VG, and you look at this and you're like, oh man, Nebius. And
Yeah.
honestly, I think we're both right. Nebius, it dipped like 6 or 7% today, and I'm like, just because I'm not a shareholder, I'm not rooting against you. I want you to make money, but
Yeah.
I want to get back in that play. And so the hard thing for me is like I'm torn between like this. Also, you can look at this and be like, oh man, Nvidia. That's not a wrong answer either, or really, frankly, any of the hyperscalers. I thought that this might be another year where we see large cap tech have a lot of the gains in the market, like 2023. So far, it's actually been the opposite. So it'll be interesting to see how this plays out. But yeah, Nebius, which by the way has the highest projected by analysts revenue growth out of any publicly traded company out there, I believe, above like a certain market cap. It's 583% or something like that. And I think they might be low. It's crazy. All right. So two more related on this. One is Google's Gemini API calls have more than doubled to 85 billion by August, and Gemini Enterprise has grown to about 8 million subscribers. I've seen Gemini just improve by leaps and bounds. This is the point where I use it as much, if not more, as ChatGPT. It's also, I have a Google phone, the Pixel. So I'm like thinking of actually making the switch. We'll have to see how that plays out. But yeah, I think that this also, Tevis, like is a really healthy thing to have more than one competitor corner 90% of the market. Now, I hope Gemini doesn't corner 90%. That wouldn't be healthy either. But man, people are acting like AI is just a bubble and a fad, and we'll sell off these names. And I understand de-risking, but indicator after indicator, I mean, like this does not look like a fad. This does not look like a fad. What we talked about on Friday with the price to earnings, like multiple really not increasing, even while the stocks went up massively just because of actual earnings gains. It's not a fad. That's not a bubble. I'm sorry, it's just not.
Yeah.
So,
and one of these things dictates the other, right? Oh, well, data center expenditures are increasing. Well, it's like, yeah, look at the API calls for Gemini. It's more than double. Like, what do you expect? And honestly, I think hats off to Google for being able to turn it around and maintain that lead with Gemini for as long as they have. And I'm just speaking anecdotally here from my own experience. Like I was using OpenAI for the longest time, and then there was a period of time that I was using Grok, and I think it was a few months that I was using Grok before Gemini fully came out. But I was using Grok and ChatGPT sort of like interchangeably. I was using both of them, so I wasn't committed to just one. But now I'm like all in on Gemini from a personal usage perspective, and I've been using it probably the longest ever since I started switching around, like trying to find which model is the best for me to use. And the reason why is because they just continue to be good for the longest time, right? And so they haven't been toppled, let's say, from a new model coming out. I found it interesting. Did you see the Joe Rogan episode with Matt Damon and Ben Affleck?
No.
Okay. So they did this whole, oh man, I wish I saved it. Maybe I did. Let me see. They did this whole like 3 hour, Joe Rogan interview podcast thing to promote their new movie, because they have like a company where they do movies together, like Good Will Hunting and all of these. It's been like their own production company or whatever. And maybe let me see if I can find it here. And so Joe Rogan asked them around AI, and I want you to hear this, okay? This is coming from an actor. This is like actually like one of the more nuanced takes on AI. It's a little bit long, but maybe I'll speed this up a little bit. It's like a 2-minute clip. I don't know if that's okay.
Yeah, it's fine. And if this is, while you're pulling it up, like related to implications as far as job and job replacement stuff, I think maybe we'll save most of the discussion for Friday and talk with Steve on that, because I'd like to. I haven't actually heard his thoughts. I don't know what he's thinking. I have my perspective. Elon Musk, Vlad Tenev, and several others, actually major CEOs, just last week posited a lot of their opinions on it too. So yeah,
it's actually not about job. So he basically asked, he's like, how do you think AI is going to change the game? And this is Ben Affleck's answer. Let me know if you guys can hear this in the chat.
For example, if you try to get ChatGPT or Claude or Gemini to write you something, it's really shitty. And it's shitty because by its nature, it goes to the mean, to the average. And it's not reliable. And I just can't stand to see what it writes. Now, it's a useful tool if you're a writer and you're going, what's the thing? I'm trying to set something up where somebody sends someone a letter, but it's delayed 2 days and it can give you some examples of that. I actually don't think it's very likely that it's going to be able to write anything meaningful, and in particular, that it's going to be making movies like from whole cloth, like Tilly Norwood. Like, that's bullshit. I don't think that's going to happen. I think it's not. I think it turns out the technology is not progressing in exactly the same way they sort of presented it. And really what it is going to be a tool, just like sort of visual effects. And yeah, it needs to have language around it. You need to protect your name and likeness. You can do that. You can watermark it. Those laws already exist. I can't sell your fucking picture for money. I can't. You can sue me, period. It kind of feels to me like the thing we were talking about earlier, where there's a lot more fear because we have this existential dread. It's going to wipe everything out.
Right.
But that actually runs counter, in my view, to what history seems to show, which is adoption is slow, it's incremental. I think a lot of that rhetoric comes from people who are trying to justify valuations around companies where they go, we're going to change everything. In 2 years, there's going to be no more work. Right. Well, the reason they're saying that is because they need to ascribe a valuation for investment that can warrant the CapEx spend they're going to make on these data centers, with the argument that like, as soon as we do the next model, it's going to scale up, can be 3 times as good. Except that actually ChatGPT-5 about 25% better than ChatGPT-4 and costs about 4 times as much in the way of electricity and data. So those, they say that's like plateauing. The early AI, the line went up very steeply, and it's now sort of leveling off. I think it's because, and yes, it'll get better, but it's going to be really expensive to get better. And a lot of people are like, fuck this, we want ChatGPT-4, because it turned out like the vast majority of people who use AI are using it as companion bots to chat with at night. And so there's no work, there's no productivity, there's no value to it. I would argue there's also not a lot of social value to getting people to like focus on an AI friend who's, telling you that you're great and listening to everything you say and being sycophantic. But that's sort of a side issue. I think for this particular purpose, like the way I see the technology and what it's good at and what it's not, it's going to be good at filling in all the places that are expensive and burdensome, and then they get harder to do it. And it's always going to rely fundamentally on the human artistic aspects of it.
So, okay, a couple of pieces there. Now, you got to understand and by the way, guys, I did speed it up. It was 125x. Okay. The reason I like that clip, Roy, is a couple of reasons. Number one, I was surprised at the beyond surface level knowledge that this guy had about the business aspect of AI and capital expenditures and the valuation concerns. And I see a lot of parallels, right, with regards to OpenAI and all this like circular investment and so much that's going on with regards to the growth and the charts that we showed. But he's saying, look, and these guys write a lot of their own scripts. They produce a lot of their own, films. And he's saying it's a great tool for me to use, similar to how I have Photoshop or Adobe Illustrator or whatever. And like, it's always going to be around, but it's not going to be the end-to-end replacement for the creative process, because we're already seeing now the start of a plateau in terms of the exponential growth we expected in the depth of its knowledge. And as a result of that, it's going to be disproportionately costly to further improve it in that same exponential rate. The exponential rate is going to decouple at some point. What do you think?
I think he's wrong. He knows a lot more about the space than I would have expected, though. Most new technology, basically, you get used to how technology progresses through society, and it gets faster and faster over time. And AI is not going to be different. We've seen a lot more adoption than you'd probably expect from the initial OpenAI launch. Like I talked to like 80-year-olds and 90-year-olds that are learning how to use AI. Like it's pretty impressive as far as the impact on society. Second, as far as costs, there's a lot of potential drivers of cost onto the downside. You look at a lot of the chips and the chipsets that NVIDIA especially, but also AMD are putting out, and they're very impressive. There's a significant amount of cost. Now there's a lot of cost to those, but there's also things in the manufacturing process that they can do to increase reliability, decrease number of defects, improve throughput. And Air Test Systems is just one of those, by the way. It has a differentiated approach, which is why I'm investing. But there's others there too. And there is a lot of experimentation in the space to try to do that. So all of these things will drive down cost over time. Plus, his thesis is basically around OpenAI. He seems to equate that to AI. He's missing, like, I don't use Claude very often. What I've heard from those that have, well, let me throw this up. I'll just not share the soundbite, but I don't think we need the soundbite. Let's save this for Friday. Anthropic CEO said, we might be 6 to 12 months away from models being able to do what software engineers do end to end. Like, it's already, I talked to guys that are in the space and using it, and they're saying, hey, this is basically somebody fresh out of college. This is better than them. And so they have like a bunch of these agents running and doing this code that they need to oversee instead of actual people. And this guy's saying, hey, we're 6 to 12 months. Now, maybe it's just hype to sell a model, but you see Anthropic's product improve. Grok went from complete joke, and I think it still is on the image generating side, to actually pretty decent very quickly. We've seen, and we just talked about Gemini and how impressive it's improved. This, I think that plateaued. Part of the issue with ChatGPT is the brain drain, what Mark Zuckerberg did by poaching a lot of talent, a couple other firms too. And second, the guardrails that they had to put in place, and justifiably so, because of AI, it's not hypnosis, not hallucination, psychosis. That's what it is. That's a real danger. And so they had to like basically do a partial lobotomy of the model if my read between the lines is accurate. So yeah, anyway, I think he's wrong, though he's far more educated on it than I would have expected. So, well, and it's too early to tell for sure.
I think there's also like a bias there. It's like an engineer being like, oh, AI is never going to take over engineering because they're an engineer, right? And so, look, I find a couple things interesting. So one thing that you said is like he's conflating OpenAI, which we know to be losing market share and dominance overall, that they're losing in the race, with AI. And there are other AIs that are taking, that are just better models overall at this current point in time. The other question is like, okay, well, we know that there's certain fields that are easier to replace with AI than others. I would argue that software engineering is easier to replace with AI than any creative pursuit. Right. So yeah. I think that like that's where I was thinking when I was listening to this, and it was super fascinating to listen to, because my overall question was like, do we think AI is going to get to a level where it can replace creative pursuits? And just to draw a parallel, Matt Damon, also sitting beside him, commented on this on The Rock's new movie, The Smashing Machine, and he was saying like, there was a scene, I don't know if you saw it or not, Roy, but there was a scene where like he has a substance abuse problem, and he was sort of like in the hospital after after he whatever had an episode, and in an interview, The Rock was saying this, and he's like, oh well, my dad had a substance abuse problem, and he would just like try to play it off and do this thing where, like, he was trying to act like it was not a big deal. And he's like, oh, and also I took that. And he's like, oh, and also I remember when my mom was in the hospital and the doctor gave her this bad news. She like took the hospital bed sheet and she was like hiding under it. And he was like, to me in that moment, she felt like such a helpless, child. And in that scene, he did both of those things. So he took his personal context, his personal experience from real lived events, and he translated it into a piece of art. And so the idea is, like, can AI get to that level of sophistication that draws so deeply from personal experience and context? Because so much of the sort of artistic layer of what makes an experience real is drawn from real events. And I think that's going to be a nuance that's much more difficult to capture with AI versus something like, a software engineer writing a couple lines of code or a graphic designer creating wireframes.
Yeah, I think it's an especially good point on, like, his perspective is on the creative arts, which might take a little bit longer to play out than what's happening in mathematics and programming. So, yeah, we'll have to see. But I hope he's right. I honestly do. I mean, as an investor, maybe it wouldn't make me as much money, but I'm okay with that trade-off if it's easier for society to just ease into this. So
you think the demand is justified? You think the demand will continue? You think the expenditures and the build-out are all justified? You think all good in the hood, no trouble in paradise?
Some trouble, but these are not like DEFCON 5 or anything like that.
Thank you, Express Investing, for the Fiscal AI Fund. Yes, they hate me, but I'm lucky that you don't. So I really appreciate it. Roy, this is the time for you to plug Fiscal AI.
Absolutely. Throw this up, Tevis. Fiscal AI, my one and only sponsor, product that I really do like, guys. If you like basically doing deep level dives on your company, it's a really good product. It's really nice too for companies like, we'll talk a little bit about Netflix later. Right when they have earnings, you get the numbers and everything way faster than any product out there, except for the Bloomberg terminal, which frankly I cannot afford. So anyway, there is a coupon code in my description. Thanks, Tevis, for letting me pitch this. 15% off, gives you 2-week free trial as well. No obligations. Let me know if you guys do try it or if you do like the product. But yeah, as I said, I like it. But Tevis,
also, Fiscal AI, reach out to your boy, because I think I'm the only one out of our group that doesn't have a hookup from Fiscal AI. So get your life in order, Fiscal AI.
Yeah. So I had this chart up, not for pitching Fiscal AI, but I wanted to talk about Micron because I saw a couple of people, mentioning that this is one of those major choke points. By the way, shout out to the CEO of Air Test Systems. About here, he was basically saying, without saying, like, you should really buy call options on Micron. And in the earnings call, it was like, wait, is he like basically calling out Micron as this juggernaut that I should invest in right now that's going to go to the moon? And that's exactly what's happened, is massive demand, which has fueled margins. There's newer and more expensive products. Micron has solved some of the hindering factors, well, not completely solved, with DRAM, with HBM, and so forth that are being used in the AI space. But yeah, this is one of those major choke points. And when it's basically a triopoly between these guys, Micron, Samsung, and also, Hynix is owned by Samsung. Oh, what's the other one? I blinked on it. But regardless, I mean, the numbers look good for PayPal. That's the problem, but it needs to have more than numbers, but a narrative. I don't know, guys. I might end up reducing. But anyway, there was a massive insider buy, basically at all-time highs, which sent Micron further into all-time highs. But yeah, lots of different ways to play the AI space. One mistake, by the way, that people make, and with some of these AI names, you'll see like new all-time highs, and you'll say, oh, that's a terrible time to buy. Historically, if you buy at the all-time high of stocks, you will outperform over the broader index. It's a weird thing, I know, but usually, not always. Usually names like this, like Micron of this size, they're running for a very good reason. I'm just sorry I didn't buy back in October. Any interest in Micron, Tevis?
I revert back to my previous answer of I can't own everything in the world, unfortunately.
Yeah, for sure. Yeah, but yeah, that's a company that's been doing really good things. Okay, Oh, there's one more piece to this, and I just closed it, but it's fine. We don't need to have this up. OpenAI mentioned that they were going to launch its first device this year. Tevis, is this going to be a death knell or a threat, at least, to Apple and to Google?
I don't know what that company's doing, bro. And like, so if there is any concern that I have on AI, it's around OpenAI, personally speaking,
Same,
because it just feels like desperation center over there. They are losing market share, and they're like, we're going to introduce ads, and no, we're not going to introduce ads. We're going to test out ads. We're going to introduce a device. It's like, guys, figure out your shit. Like, just release a new model that's better and start to win that game. I think it goes back all the way a year ago, or maybe a year and a half ago, when we were talking about this, the commoditization of LLMs and the first mover advantage that OpenAI has is dwindling. And I think that, in 6 months or 12 months time, it won't have mattered because it is purely around execution. And what do I think about a device? I think Tanner posted about this. He's like, oh, well, entertain me for a second. Like, if they introduce a device, would you use it? I was like, no, because I already am embedded deeply into an ecosystem. You with Android, me with Apple, iOS. And it's not like something you can just start, right? Because there's sunk costs. There's switching costs in being embedded into your existing ecosystem. I think they should do it, or somebody should do it. I know Tesla was thinking about starting a phone at some point. I think more competition is good as a consumer. I agree with that. But again, I think the move for OpenAI to have some type of device, I don't know what it's going to be. I'm just assuming a phone, but somebody was saying it could be like earbuds, where like live translation earbuds or whatever the case may be. That could be cool. Yeah. But they were working with Johnny Ive, who that's why I defaulted to the phone idea. Yeah, so exactly.
Maybe it'll be, something like Meta's Ray-Ban product. Like that would also be even more so, I think, than earbuds, but we'll have to see. It'll get some initial, like, no matter what it is, people are going to be really excited because it's like a new thing. But we've seen this, like, I don't know if you remember the Rabbit, but like a year and a half or 2 years ago, like people were like, wow, this can be great. Now nobody talks about it. And when people got in their hands, they're like, this is really mediocre. So
yeah. And that was like the first iteration of like, oh my, AI is going to like disrupt phones and the smartphone industry.
Yeah. So I'm skeptical that it'll do much. That moat is, it's just hard for people to switch away from devices they love. Apple has that. I don't understand. I'm not an Apple fanboy, but I mean, you guys in chat, you don't want to switch away from the ecosystem. And even if the phones are demonstrably worse in almost every way and more expensive, sorry, no offense, it's true. There's reasons that keep you there. So
this is a big statement. 5 years from now, nobody will be talking about OpenAI. See, this is the problem, Keanu Reeves. I think they still will be talking about OpenAI, but the reason is because OpenAI freaking entrenched themselves with every other company out there through investments and all of these deals. This is why I was against like that circular investing thing in the first place, because you essentially have NVIDIA, Intel, and Amazon, like all these other companies just like betting on a winner. And it's too early in the game to be betting on a winner, man. You're in the first quarter. You can't be like, oh yeah, this team has it. It doesn't work like that. So we'll see.
Yep. All right. Yeah. So beyond that, I want to talk about the Elon Musk and RyanAir stuff. I don't know. I don't know that I need to show any like the tweets and the videos. If there's one that you want to do, go ahead and grab it.
Maybe super quick before we go into that, really quick. Just want to get your thoughts on this. So JKM reminded me saying, did the market crash today because of Greenland or because what's happening with Japan bonds? I'm leaning towards Japan, leering towards Japan. So this is not a meme coin. This is Japan's 10-year bond, and it's gone parabolic. Unprecedented times ahead. Roy, what do you make of Japan in the grand scheme of what's going on right now? Yen carry trade 3.0. I don't even know what to call it at this point.
I mean, I think it's "Por qué no los dos" situation where it's both.
Okay.
It's from a commercial, the OGs will understand. But anyway, no, I think it's probably both factors. In this case, unlike Denmark and maybe some other parts of the EU in the future, I don't think this is because of tariffs or anything like that. It just, they have a debt situation. They have a demographic situation. And so that yield may continue to rise, which is pressure on the U.S. side.
All right, that's good enough for me, sir. Sorry, that's good enough for me. Let's talk about
RyanAir, Elon,
yes.
Tesla too. So yeah, basically to catch people up, and if there's any clips or anything that you want to show, I think we can just kind of tell the story though.
Sure. I mean, I shared a bunch of stuff with you, but yeah.
The CEO of RyanAir had not only stated that they basically wouldn't use Starlink, but also that Elon Musk did not understand airflow, aeronautic stuff. And Elon Musk took that very personally. It's the classic meme of Michael Jordan. And I took that personally. And he really did. And this is the richest man in the world who, sometimes out of spite, sometimes out of pride, sometimes for the memes, does things that do not make fiscal sense. They don't make maybe moral sense. They don't make sound judgment sense, but he does them. So it is very entertaining. And so he replied that he really wanted to put a Ryan in charge of RyanAir. It is your destiny. He's talked about how he's going to fire the CEO, that he wants to get rid of him. RyanAir, of course, pushed back. And actually, maybe you can pull up that tweet.
I don't know if you saw Elon's response to RyanAir's pushback.
Oh, no, I have not yet. Oh, yes.
Oh,
so anyway,
buddy.
Yeah, I guess you can explain that and then show me, and you can see my surprise face. So.
Okay, here we go. We're going to see this in real time, guys. So RyanAir responded with this, saying, RyanAir CEO to address/undress Elon Musk Twitter tantrum at Dublin press conference tomorrow, 10 a.m., Wednesday, the 21st of January in Dublin, to address the latest Twitch shit. Quote, Musk knows even less about airline ownership rules than he does about aircraft aerodynamics, said Michael O'Leary, I think is his name. Perhaps Musk needs a break. RyanAir is launching a great idiot seat sale, especially for Elon and any other idiots on X. 100,000 seats for just $16.99 one way. Buy now before Musk gets one. You ready for Elon's response?
No, yeah, let's see that.
So Elon responded, this insufferable special needs chimp currently running RyanAir is an accountant. He has no idea how airplanes even fly.
Honestly, there's probably a number of airline CEOs that have no idea about any of that. They're just businessmen. So fair take, Elon.
So honestly, I saw somebody post around this as RyanAir playing 5D chess, because they know that they can provoke Elon into making an emotional decision, because that's exactly the playbook that he had with Twitter.
Yes.
They entirely provoked him into buying Twitter above asking price. And Elon has FU money. And from time to time, he exercises that FU right, because he bought Twitter for what, $44 a share. And look, man, I think he could definitely put in an offer for RyanAir, but I have a thought on that. But
$54.20. It was $54.20 he bought Twitter for.
$54.20?
Yeah, it was the $4.20 because of the meme, Elon.
Okay.
All right. Polymarket spiked previously above 15% for a brief amount of time yesterday. 8% chance will Elon Musk buy RyanAir. This feels low to me, Tevis.
That's only if it goes through. And here, let me explain why it feels low. So sorry, finish your sentence.
Well, I think you're going to say regulator approval, and it's in the EU, but I don't know, man. Elon has done things like this in the past. I mean, it's not a 1-for-1 with Twitter, but it kind of is. Could have a big impact on publicly owned stocks that we have, which is just Tesla.
Yeah. So I made this post yesterday, maybe. And I said, look, RyanAir being bought out by SpaceX or Tesla was not on my 2026 bingo card. eVTOLs is the play. He's been talking about eVTOLs, electric vertical takeoff and landing basically electric flights. For a long time. He's been talking about it for like a decade. Short haul is ideal for it because RyanAir flights are like an hour to 2 hours. Free Starlink forces the entire market's hand. Everybody else will need to have like free internet. Otherwise, it's like this is the cheapest one in the space. I said, however, EU regulations need over 50% EU ownership. And because Elon is like a majority holder of SpaceX, I think Elon himself would only be able to own about 24%. And you would need significant EU ownership. I said Elon would need a very creative cap structure to bypass effective control clauses. Either that, or he just needs to get like Irish citizenship or something. But yeah, regulators is going to be the thing. And regulators in Europe, especially, are definitely not Elon's best friend here. So, yeah.
So that may explain why Tesla actually didn't dip by as much as I thought it might, based on the double feature of the macro tariff stuff in this. I'm hoping for a dip in it though, for whether it's rational or not for Tesla. It's my smallest position by far. I can't buy it here. It's been falling. And I was like, well, maybe something in the macro, maybe, of course, quarter four is going to be abysmal. And then one other thing. So potentially this, Elon potentially buying a large stake in something, having to borrow against equity in a certain stake, which we've seen was negative on Tesla's stock price. Sounds like that may not happen at all. But if all three of those things lined up, like we could see Tesla at quite attractive prices.
Well, look, I don't think it would have the same effect on Tesla. And actually, this is an interesting conversation topic. And the reason why I don't think it would have the same effect on Tesla is because it's not going to be a standalone purchase. He's not just going to buy it. I think he's just going to buy it under the umbrella of SpaceX or Tesla. And it's not going to be Elon buying the company. It's going to be an acquisition of SpaceX buying the company. And they can spin it as like, oh, we're going to do these eVTOLs and, we're going to have Starlink distribution. We're going to control people's attention span where they get Starlink if they sign up for X or, whatever the case may be. Like they'll find a way to justify it. And especially for SpaceX, it's a freaking private company. Like it's not going to get like Tesla wouldn't get hurt the same way as it got hurt with Twitter. You get what I mean? So
yeah, no, I don't expect a dip, back to where it went, almost $100 a share. But could we see like 250, 275? I think so.
250?
Yeah.
Really?
Yeah. Down a little over 33%, 37 ish. But yeah. So, it would take all three of those, Tevis, like a worse than even expected quarter four, which I think a lot of that the market doesn't care about. But if it's absolutely eye popping, that plus this current macro as we have right now, maybe this lasts until the earnings for Tesla, which is coming up soon, as well as something out of left field from Elon Musk causing an impact at the share price. All three of those can make Tesla stock, it just moves on narrative. When the narrative shifts, it's relentless to the upside or the downside. And so I doubt we'll get all three of those. But if we do, I have to sell some stuff. I don't need both kidneys, I guess, and be ready to buy the dip.
Yeah. If it went to 250, man, it'd be crazy. It's what, like 420 right now ish?
I would figure out a way to make it a 10% position right then. So if that would mean like cutting all of PayPal and HIMS, I would do it. Selling half of BM&R, I would do it.
Yeah, it's at 419 right now.
It's fallen a long way. It was nearly 500. So
yeah, 498, and it's 419. I could see it. Well, it depends, but I could see it going back to the 300s. 250, I think, is a stretch. But
yeah.
I don't know. Who knows? It's done that trip before. It's gone from 400 to 200 in the past. So we'll see.
Yeah. All right.
Shall we? Questions? Oh, Netflix. Sorry.
Yeah, I was going to mention Netflix. So, well, let me pull up the share price here. Actually, I'll pull up a couple of things. So it's funny and also sad if you're a shareholder. I'm thankful that I'm not. All right. We can see just how relentless Netflix has been to the downside. It's almost been cut in half from its this was an all-time high to where it is right now. And of course, the beginning of things that was weighing in on this. Well, there's a couple of things actually, but then we had the news about the Warner Brothers Discovery potential by Arrival, and then no, it's Netflix, no, it's that. There's been a few issues here and there. One of the things, a lot of the numbers. So if we look at the numbers, you can see, let's just do total revenues and maybe, it just continues to increase. That is annually. So quarterly, it continues to improve by leaps and bounds. And then if we look at actual earnings, or we could just look at basic EPS, probably diluted is better. That continues to be fine. I mean, it's not up and to the right, but there is seasonality with their business. So if you look at the metrics, if you look at, we can change over here to segments and KPIs. Ratios. We can look at, like, for instance, price to earnings. Let me remove these rather than hide them. And we can do price to free cash flow. That's not as clear though, but we'll do both of these. And then make sure that I am on quarterly. Perfect. And those don't work well together. So let me hide this.
Fiscal AI, baby.
Yeah, it's cool. So price to free cash flow is like stable. I mean, you can see it's declining slightly, so that's not a concern. Let me show this, and let me hide this one. And here is the price to earnings. You look at where it has been relatively. This is a neat measure to look at. They're at the same place where they were back in May of 2023. And again, we just saw their revenue, we saw their earnings, we saw their price to free cash flow. You can look at margins and everything. The only thing that I've really seen beyond the narrative just being really sour and the Warner Brother thing is that the number of watch hours per user was actually down. And this, Brad Friedman had posted about this. I didn't see why the tweet was deleted, but that he speculated that Warner Brothers Discovery was the acquisition that Netflix wanted to take into to increase that watch hour per user metric. That was really the only weak spot. So, yeah, we'll have to see how this plays out. Are you interested at any point in this, Tevis?
I mean, it depends where it goes, man. I think I'm sort of against the type of content that Netflix is putting out with their political sway. And in their note, they talked about competition. So maybe I will just, while I talk over this, this is the Netflix note for this quarter. They talk about content. They talk about, engagement with all their specials, whatnot. And then they have a section here where they talk about competition. And they talk about YouTube. I don't know if you read this at all, Roy, but
I saw this clipped by somebody.
Yeah. I don't know why this is not okay. This my mouse is definitely not in the right place. But okay, YouTube has been leaning into TV over the last several years by adding live professional sports, and starting in 2029 will be the global home to the Oscars. Amazon owns a vast library of series and films through its acquisition of MGM. Is investing more into sports with Thursday Night Football and a full slate of NBA games, and Instagram is bringing Reels to TV with a new app. We relish the competition and work to earn more of consumers' attention. Despite our success over the years, our share of TV time remains below 10% in the major markets in which we operate. So you're seeing a much more diverse space, let's say, from a competitive lens, with Amazon and YouTube specifically dominating watch time. I think Netflix will ultimately be fine, but I think the amount that they're spending into the original series, I think the overhang of Warner Bros. Discovery, which they also talked about somewhere here. I was reading this right before we hopped on live.
I didn't see this part.
I think Warner Bros. Yeah, they're working to close their acquisition of Warner Bros. They had a section on Warner Bros. Actually, and look, with the stock falling so much. Yeah, here we go. With the stock falling so much and it being a partially, cash and share purchase, I think they're going to be forced to eventually back out of this deal. I don't know, but that's just what my gut is saying right now. So basically, they said here all cash, and this is what they changed it to. They changed it to all cash, I believe, because the first round was cash and stock. People in the chat can keep me honest. Quote, we believe our proposed purchase of Warner Bros. Will allow us to accelerate our business strategy. Together, we see two main areas of opportunity. First, their library development and IP will allow us to provide an even broader and higher quality selection of content for members. And second, the addition of HBO Max will allow us to offer more personalized and flexible subscription options, better meeting the diverse preferences of our global audience. Together, they're highly complementary businesses and will be able to offer more opportunities to creators and strengthen the entire industry, allowing us to offer more choice and greater value to consumers. So, again, it's a matter of whether this will pass or whether it's going to get blocked up. Netflix was what, 130, around 120, 130 bucks when they started, pursuing this, 120 bucks ish. And since that time, from 120 down to 80, that's a big dip, my man. And I don't know. I think if they pull back, if they say, we're no longer pursuing this, I think you bounce back to 100 immediately.
Yeah. Yeah, there's an overhang there. It's hard to know when that'll actually, clear up. And the other thing is, it's not really a space I'd want to be in. Some people mentioned that the revenue growth is slow, and they'll find further ways to monetize users. There's some things they can do there, but there's better opportunities.
You'd never want to own it, like even if it fell. Let's say it fell all the way down to 65 bucks.
Give me 40.
40. Bro, 40. Warner Bros. Will buy Netflix.
Yes, that's a good point. Yeah. Okay, 60 then. 60, I'd probably get interested. So just as a rebound swing trade. I don't know that it would get there. That's another, 40 something percent, 45% downside. But
yeah, I don't know. I mean, I don't know. It's interesting, but it's interesting. I don't like if this was HBO or something, and then let's assume HBO was a standalone company, whatever. From a pure content library perspective, I'd be really interested. Like, I don't think Netflix has the best content. I think they have one of the richest content libraries, like the deepest content libraries, but I don't think they have the best in terms of quality. And I think all of their originals, it's going to be really tough for them to compete over the long tail because they consistently have to sing for their supper. Whereas Disney Plus, for example, has all this IP that they can leverage and installed fan bases that they can leverage. And so I think this is partially the reason for the Warner Bros. Acquisition is like you get Harry Potter, you get Sopranos, you get HBO, you get a whole bunch of other stuff. And so that's the thing that I've never liked about Netflix, regardless of like the sort of like political, bias in all of their content. It's the fact that their originals don't have installed fan bases with IP that's rich enough to create a buffer for your investment. But they've been proven, to do well. But at the same time, they're also investing a ton in Netflix originals. Now, one thing that I do love about Netflix is the diversification into sports. And I think that's going to be really big. But now Amazon is doing that with Thursday Night Football and whatnot. So I don't know. It's a mixed bag. It really is a matter of like, what price are you getting it at? And I don't think I would be taking a look, until or unless it fell into like even lower than this, honestly. But it's getting compelling here. Like I have the document opened up and I don't even own the shares. I was just interested in reading about it, right? So yeah, best quality, I do agree here, is Apple. Apple originals are fantastic. And HBO, I mean, I saw the Night of the Seven Kingdoms the other day. I'm watching Industry, the new season. HBO is just brilliant, man. Succession is just, they have the best shows out there. Sorry, that was just a lot of rambling, but
works for me. No, I don't know. It's not something. it's something to keep on the radar for sure. And oftentimes, like what can happen, kind of like with Duolingo when we were looking at it in the Songtick episode, you can take your eyes off of something and be like, yeah, I don't know about that. Look away and then look back, and all of a sudden it is demonstrably cheaper. So is there a scenario that plays out that we see like 33% further downside in Netflix?
Yeah, bro.
That can happen.
Speaking of Duolingo under 150, I mean, if you look at it, this is the last point where it bounced all the way in August of 2024. It bounced at 145, and guess what? Right back to 145 we go. Just a full round trip over this last 2 years.
Yep.
From 145 to 545 and back to 145. So, and then here's what Netflix looks like, right? Look at that.
Don't bring up PayPal.
Back to April lows. And
Don't do it.
I got to go on a weekly time view to fit it in the screen. Holy.
Thankfully,
man.
Thankfully, I never bought way back then, but man.
Look at this beautiful chart. This is like a huge middle finger to your portfolio, Roy.
Oh, good. Inverted head and shoulders.
On a multi-year view.
Yeah.
Anyways. Yeah. Roy wants bargains. Netflix at 40, Tesla 225, Nebius 80, PayPal 20.
Well, yeah, like
PayPal 20 would be wild, dude.
Yeah, PayPal at 20 is like the U.S. economy is dead or something.
They're taking it private at that point.
Well, they would have allocated as much. They would have already allocated money to buy back their entire market cap.
Yeah,
like no further allocation. Boom, and they have that between cash on hand, a couple of assets that they can sell, and then their rotating credit faculty. So, no, that's not happening. Yeah.
All right. What are we buying, or are we stacking cash right now?
I just finished buying Air Test Systems up to my full allocation, and also VG got it up to my full allocation. I have a little bit of cash left. Bought a small, even smaller than Air Test Systems play, just as an investigate type of position. I need to spend more time with it to make it meaningful. But other than that, like I'll monitor the SIP, and I would not mind, like especially Nebius. I'd love to get at. I don't know if it could go to 75 again. 75 looks pretty good to me. It was there not that long ago. Or more NVIDIA. And I'm always torn between the two because it's like they're both great. Like brownies or chocolate chip cookies. It's like I like them both.
Yeah. So for me, I wrote more cash secured puts on Nebius. I wrote 110s for March 20th, and I wrote NVIDIA 185s for February 20th. I think February 20th or March 20th. Either way, but like the reason I'm writing them I'm writing them like in the money because I'm a degenerate, but like the reason I'm writing them so far out in time is because like I don't have a lot of cash available. So I don't think that, honestly, I'd probably feel like this is the ironic part, Roy. Like I have NVIDIA $200 cash secured puts and I have NVIDIA 185 cash secured puts. And I feel like if both of those were safe, I would probably feel FOMO, And that's what I'm doing. And then probably tomorrow or by the end of the week, for sure, I'm going to be buying a little bit more air, but it's still a super small. It's like a fraction of a percent. When will we find out about Nebius? So as I was saying earlier, it seems as though February 4th is the new date that we're going to be finding out about Nebius. Unless that's drastically changed. I don't think it has. I will let you know through X if and when it does. Let me see here. But yeah, February 4th is the new date that we're looking for for Nebius Missouri data center. What are y'all's opinions on TE Energy?
Yeah, I had to look it up. I didn't recognize it, and I still don't.
Does he mean BE Energy, like Bloom?
No, the ticker is TE, and it looks like it reads T1 Energy Inc. Okay. Engages in the production and sale of battery cells for stationary energy storage, electric mobility and marine applications in Europe and internationally. Never heard of it. Sorry.
Yeah, sorry about that,
But
Charlie.
if you've been in it a little while, it looks like you made some money. So congrats.
Also, like we just did a episode that was, I think, positively received for Zeta. If you guys have these picks and you also know of content creators that talk about them, honestly, just make a post on X and tag us and tag the content creator and be like, you should have this person. Because like I will reach out to them and try to get them on for Stock Tank. Can you explain why BMNR should trade above MNAV? So at a high level, I think it's a mixture of their moonshots. I think it's also the fact that like many institutional investors are restricted from buying just spot crypto directly from an exchange. And BMNR is like a regulated vehicle for them to get exposure to Ethereum. I think the other thing that would command a premium is just management and their ability to sort of navigate. So investors would get some type of premium there, and then obviously the flywheel of revenue that they generate from staking benefits of having Maven and others, and then also this idea that like, well, they're going to dilute, but they're going to do so above MNAV. They're going to do so at a premium, so it's always going to be accretive because your Ethereum per share count consistently goes up. So those are like the very high level why, in theory, it should trade above MNAV.
The real reason is Feastables and Mr. Beast.
Yeah, that's, I guess, part of the bull case now.
I think they'll make money from it, but it's weird timing. It's just not great.
Tevis, what part of the Nebius growth is in Europe right now? Do you believe it will grow based on geopolitical? Yeah, so one of my predictions was around the European build out, and Europe basically said, hey, we have $20 billion and we want to build 5 gigafactories. And they were working with Accenture for this. And I think Nebius, because they're headquartered in the Netherlands, like they have a good chance of building this out, especially because like Nebius is introducing a lot of new hardware into Europe as well. Like even with the NVIDIA partnership, they're introducing the newer models, like even Vera Rubin was going to be introduced in the US and in Europe simultaneously. So I would say they're definitely leading, from that perspective, from a European build-out perspective. Now, I think where that cuts the other way is if, in fact, and this is my fear with Nebius, honestly, is if this thing escalates with Greenland and Trump says, you know what, screw this, all of these companies that are European companies, whatever, Tariff or whatever the case may be.
Yeah, that's
Nebius,
good.
ASML is also Dutch or I think they might be hurt, and I think that might not reflect well on them. So that's a fear that I have right now.
That's a good thought.
Yes, the share authorization passed. They posted a thread earlier today, Jay, which I just also covered at the beginning of this stream. Who are market content creators you guys watch outside your group?
Outside my group, a lot of stuff that's not related to investing at all. But yeah, it's basically all I have time for is occasional videos. Like I wish I had more time and I could watch all of them, but occasional videos from our group.
Yeah, in terms of market, outside of our group, I watch Joseph Carlson, but I think that's the only one that's like outside of our group.
Okay, I like him.
Yeah,
I know Steve may have a beef with him, but he's smart.
Do you think countries will still trade figuring Trump will be out in 3 years, so they deal with short-term pain knowing he will be gone?
There's a good possibility. I think there will be a better indicator depending on how the election results happen this year. I know it doesn't impact the presidency, but it does change the odds and the strategy. So,
yeah, Novo, yeah, exactly, same boat. Like companies that are not U.S. companies, let's say. It's a fear, but we'll see. Anyone playing ONDS or ONDL?
No, I do know a little bit about ONDS just because of the Palantir connection, and did some digging in that. They're pretty interesting, but no, that's not the one I'm looking at. But if you're in it, congrats. It's been doing good.
Just wondering, Tevis, do you think this macro is going to be? And by the way, I have to do SoFi earnings predictions. I haven't had any time, but I got to do it at some point this week, or maybe this weekend. But I think this macro is not going to be bad for SoFi. Like, regardless of what geopolitical sort of volatility that you might have on a weekly basis, the fact of the matter is, if you zoom out a little bit, rates have been coming down, and that's largely favorable for SoFi. And they're going to continue to come down. That's the expectation. That's going to continue to be favorable for SoFi. So I think SoFi is going to have a good year as a result of the rates falling. Interesting question, Roy. I want you to tackle this first. So we got a third push today on the tariff ruling.
Yeah.
Now, the interesting piece here that sort of makes me it's just ironic is that when the Supreme Court pushed out the tariff rulings, like the first time or the second time, the market traded down on that news. And like now it's like we're trading down because of tariffs. So do we trade up because the Supreme Court rules that tariffs are illegal? Like what? So by the way, we know that Trump has a backup plan for this. He's already said that publicly. It's, I think, from a policy perspective, going to be somewhat of a nothing burger because he's going to try to circumvent it. But from a market perspective, it's very sensitive towards this decision. So what do you think, Roy?
Yeah, I agree that it'll have a contingency plan, and it'll take time to play out, even if it ends up being overturned by the Supreme Court. I am actually thinking that they will rule relatively soon, even though it does keep getting pushed back. There's a lot of pressure on that decision. I think a lot of the reason for the delays, they've decided to overturn, but they're trying to figure out how to work that. And probably the best approach is have it phase out after a set amount of time and not have repayments. But otherwise, if they're trying to go backwards in time and have repayments, I think the market will react terribly in that environment because it's like, okay, now we have to print more cash, which is, I mean, we know what that does to our economy and to inflation as well. Nobody would like that. And you're not even giving it to investors to throw into the market and have that helium. So that would be a not doomsday, but a really bad scenario that would, we might see like a 15, 20% correction possibly. I don't know though. It's kind of too early to say, but I'm hoping for that. Okay, it's wrong. No refunds. It phases out in however many months, which I think the market would actually go up a lot on that.
I think the Supreme Court is trying to figure out how to approach this because they're in between a rock and a hard place on this one.
More or less, yeah.
Roy, do you want to share which drone stock you bought? You don't have to, and you can make a video for it.
No, way too early, and it's way too speculative. So all I'm saying is if you've been interested in any names, I think the whole space is going to do pretty well.
Meta is attractive, but what about the bans on social media for under 16s happening in Europe? Is this potentially damaging if it spreads?
I mean, yeah, of course. Not so much for Facebook, but obviously Instagram, WhatsApp. I don't think would be impacted by this, but yeah, the gram would.
Yeah, I definitely think Meta would trade down for this. It's funny, when I was traveling, I went to a country and they don't have TikTok. Like, it's banned in the country. And I didn't even notice this until, I don't have TikTok, right? So like, I don't, I had it for a hot minute there. And I was like, that's like, it's just like 18-year-olds or younger here. And I don't know, man. It's like life goes on. Like, life is as normal. It's not a big deal, but it would definitely trade down. I think the business would be materially hurt. So yeah, it wouldn't be great.
Yep.
Roy, would you sell all your PayPal and go in on Nebius if it meant doubling your money in 2026?
Yeah, I mean, I would sell my PayPal and go into Peloton if you said it'd be a guaranteed double. I wouldn't care what the stock was. And there's only probably one stock that I even keep some of and not just put into a free double. That's Air, just because I think that it has a pretty good chance of more than that this year. But there is some risk. But yeah, pretty much any position, even the ones like Palantir where I'm like, I'm not going to sell anymore. It would be gone. Guarantee me a double, yes. But I mean, there is a point, like I know that that's the extreme that you're going for. There is a point where what I see in the quarter four earnings for PayPal just is not sufficient, and I'll talk about that when I do my earnings predictions for them. And I continue to see Nebius either improve, which they are going to, or that stock sells off even more. There is maybe it's a possibility that either some or all of that position is converted over to Nebius.
Did they talk data center permits? Yeah, so we've mentioned this. I also want to share this because this literally just got commented on my video. So this was this city council meeting. I said here, all eyes on this vote for Missouri DC approval. And then we got news that it's actually going to get pushed out. So they're not going to talk about Nebius here. And Austin here, thank you for the comment. Austin commented saying tonight was just for power purchase approval, pass-through costs for the DC from June 26 to October 27. October 27 is when the long-term generators will be operational. So I think we have to wait a little bit longer for Nebius specifically, but I think February 4th is the new date that we're looking at for Nebius specifically. Are you buying Tesla here? I think, Roy, you said 250. That's your
250, 275, somewhere under 3.
Under 3. I would probably buy more Tesla in the 3s, perhaps, but I definitely wouldn't say no under 2. Do you think it's actually going to fall, a lot on earnings? Earnings is what next week?
Yeah, I don't think it will. I would like it to, because my position is so small and I want to add, but I think unless they're just we know they're going to be terrible, just abysmal numbers, and the media will be all over that, whatever. But it would have to be even worse than the abysmal numbers they're expecting, and I don't know that I'm buying that.
Yeah, got it. Makes sense. Do you think RyanAir is just engaging for publicity?
Maybe.
It's very possible. It's on brand for them, I think. Can you all talk hood? Is it attractive here? Prediction markets for playoffs were great. Yes, I would say it's attractive.
Yeah, long term, an incredible play. That's why I didn't sell any when it was 150. And I won't add here just because it's my biggest position still. They just announced today that they finalized the joint acquisition with Susquehanna for the predictions market, and that this year they will be selling or doing their predictions market on that platform. Now, I don't know if that means all or just some or some of the new volume versus Kalshi, but when they shift over from Kalshi to that, they instantly double essentially their revenue from the predictions market like that, because they keep all that margin, or they can gain market share by attacking on that rate, which they would be as, if not even more competitive than Kalshi. So anyway, there's a lot more going on for them, international and so forth. One of my earlier videos talked about the overall opportunity I saw long term. The only kind of red flag is if you think it's going to be a crypto winter sometime soon, there might be a much more attractive entry if you're planning to do a long-term play.
Cool. IBKR report after the close. What do you guys think? So IBKR beat EPS by 10%, beat revenue by 2%. Customer accounts increased 32%. Customer equity 37%. Darts 30%.
Daily average revenue targets.
Customer credit 34%. Customer margin loans 40%. Yeah, I mean, I think it's similar to Hood in terms of they're executing, man, and IBKR has been quite consistent in their execution. So, definitely bullish. The stock did fall from 72 to 66, but it bounced right back. I think it's down 2%, less than 2% now after hours. So I think it'll be just fine. How much do you love Meta at this PE? I honestly want to double my Meta position. So
yeah,
that should
I wish I could.
Let's see. Any worry about SoFi being in mid-20s? I'm confident earnings. I have zero worries about that.
No. Long-term position, you don't worry about the share price.
Yeah. Not worried about it at all. What kind of revenue growth are you looking for? More than a for sure plus 15%?
I think he was talking about Netflix, and I because I mentioned it was low revenue growth.
Oh,
Projected revenues was what I was talking about. There's 2-year ahead estimates. I believe it was around 11%. I mean, it's still double digits. It's not terrible. It's just that's not what the market has been rewarding, and I don't think it really will reward in this bull market cycle.
Let's see. What price would you add more SoFi, Roy?
Probably 21 to 22. I don't know that we see that, but yeah, that's pretty easy to add. If I didn't have it's my number 2 position. If that wasn't the case, given its weighting, I would have added already.
So, fun fact: I actually let my my cash secured puts get assigned on Friday, and so I now own some more SoFi, but I'm probably gonna cut that through covered calls over earnings. So I'm gonna hold it through earnings, and I'm gonna cut it through covered calls for that small position in the wheeling portfolio. But the long term portfolio, I haven't touched SoFi nor written options on it for a while now. So
yeah.
Do you like Bitcoin at these prices? Yes.
I buy every week, so yeah.
Would you rather invest in Goldman Sachs or BMNR? I'm curious to see where people stand.
BMNR.
Wild comparison.
Yeah.
Yeah, I would say BMNR because I'm bullish on Ethereum.
Yeah.
Nebius entry for Roy, $65.
I'm gonna have to think about it at 75. Actually, it was recently there from a TA standpoint. It looks like it might touch that again. And I kind of, even if it's a small little bit and then it bounces right off that 75 and flies, at least I got some. I'd be happy with that. Bigger buy, yes. If it goes down to 65, I am quite excited, and I'll be looking to sell some things to get into it.
Got it. What are your top 5 stocks in your portfolios, please? Are you planning to trim this year? I mean, mine's public. Roy's is public. SoFi, Nebius, BMNR, whole bunch of cash. Meta is in the top 5 now.
Yeah, the only so Robinhood, SoFi, PayPal, Air Test Systems, and BMNR.
It's already in your top 5, hey? It's crazy.
Yeah, it's I allocated 10%, although I was helped by the market stuff, and it's risen another 20% from there. It's like, okay, I've got a micro cap above double digits. Keep going. If it does, due to your DD, don't like jump into a play just because I'm in it. And it's really important with this because it's going to be very volatile. But if it does what I'm expecting to, that little bit of shares of Air Test Systems are going to look like a huge position in my portfolio. So, and it's a multi-year play. It's not just a one thing, but man.
Tevis, are you concerned with U.S.-Canada tensions? Canadians seem to be pretty anti-U.S. Yeah, I mean, Canadians are freaking brainwashed by what their television tells them to. I think, I think the main, sorry, I think the main concern, I don't have any concerns, but I think escalating the rhetoric is definitely not good. I mean, I'm traveling to the U.S. in a week and a half. I'm going to be in New York at the end of January. So we'll see how that goes, but it's going to be myself and Tanner on the same flight. And we're going to go to New York for a weekend. So I'll report back to see if they give me any trouble passing over. But generally speaking, I'm with you guys. I'm like,
it always cracks me up because it's like, the only people that really hate Canadians are Canadians. Nobody else hates Canadians.
Yeah, exactly. Tanner, speaking of, has shared a video about eToro. Do you guys think it might be big potential to be the new Robinhood?
I'll
Haven't
let you
seen
go
the
first.
video. Go
What
ahead.
did you? Oh, I was gonna let you go first because I have a.
I just said I haven't seen the video yet, so I
Okay.
don't know.
So eToro was one that I actually looked at. If you recall, Tevis and I were briefly in Weeble, and it was like, they've done some sketchy things. We're going to get out. Didn't work out. Sometimes that happens. And the great thing about us is we'll admit when we mess up, and when we change our mind on something, we also share that too. We're not like trying to hide anything here. This is just for fun. Anyway, I looked at eToro right after Weeble and did a pretty deep dive at the time. Now, some things have changed, and that video of Tanner's is excellent. And he goes over, the financial platform and everything. And it's like, if you're interested in the stock, watch that. That is well worth your 30 minutes of time. Anyway, I think part of what Tanner was at least trying to say, and I haven't talked to him about it, is just him kind of hypothesizing whether it would be a Robinhood-esque type stock, acknowledging the whole time that the quality is there. I think where I might disagree with Tanner is there's a further quality gap in terms of Robinhood to eToro than he seems to indicate in that video. And it just stems down to leadership. It stems down to the relentless execution, speed, and excellence that Robinhood is able to do time after time. The leadership and generational mindset that they have, which is just, eToro does not have that. They're better than Weeble in a lot of ways, including leadership and culture. Well, culture is harder for me to read. I got to be honest there. But I've seen it for Robinhood, and there is a significant difference. So I think eToro would be one of those, especially where it's priced at right now, as it's a good opportunity, but I want to concentrate on great opportunities, and there's only so many others in the market. So
It's a good answer. Is it wise to sell Netflix and buy Hood at this point? Depends which one you're more bullish on, man.
Yeah, and the reason why you're investing, if Hood is going to be more volatile. If you want that, great. If you don't, maybe look at another one.
Yeah. Why do you guys have so much faith? I mean, we've explained this multiple times, but it's fundamentally, it's like, if you're bullish in Ethereum, you're buying BMNR because they're a company that holds and continues to acquire Ethereum. At a high level, that's it. And we're both bullish on Ethereum.
Yeah, exactly. It's a leverage bet on Ethereum, essentially. So when Ethereum goes up, it should go up and actually outperform.
Roy, what about AppLovin as of today?
Yeah, the Zeta preparation and then the deep dive that we did at Zeta, and yeah, watch it on either of our channels. It's the same video. Amazing. If you are into that space and you want to know more about that name, Wealthmatica was a wealth of knowledge, lived up to his name. AppLovin is one of those that I've been loving a little bit for the last year and a half, and I've never gotten in. And I really wish I did, because man, but where they're positioned as far as advertising, it seems like it's one of those that's not capable of being disrupted, at least anytime soon, by AI at all, like all the agents and stuff. And almost every other form of media, which Zeta is exposed to a bunch of it, the Trade Desk is exposed to a ton of it as well, even the large garden wall retailers. So they're interesting.
Mm-hmm.
I would need to do a deeper dive, though. It's been too long, and a lot changes in that space. And I don't know. It is intriguing.
Yeah. Tevis, you seem to focus on 3 stocks in your video posts. If you're going to trim BMNR, does that fall out of favor? If so, which company? Yeah. So the strategy to focus on only 3 names for videos is entirely because I pulled all of my YouTube analytics and I'm tracking all of that. And there's disproportionate viewership on those 3 names relative to anything else. I want to make more videos about other stuff. Like, I made a video about Meta, and I made a video about the Netflix Warner Bros. Stuff. And those videos got, 2,000 views. But I'll make a video about BMNR and I'll get 30,000 views. And so if I'm serious about growing the channel this year, which I am, I'd say this year more serious than any other year, because I see a path towards it becoming a full-time thing for me. Then I want to focus my videos around where the viewers are. And the viewers are in these three names. Now, if I cut BM&R, I would still talk about BM&R, even though it would be a smaller portion of the portfolio because the viewership, the interest is there. If the viewership was to fall in BM&R, then I would stop talking about it as much as I am, because I would focus on where the attention is, like what people enjoy me making content about. I'll still experiment every now and again, making content about some other stuff, but it really is that simple. It's just, there's not a perfect relationship between what I own and what I talk about. There's a very strong overlap, but it really is like, if people if I made a Zeta video and for whatever reason it got 50,000 views, I'd probably make another one and then another one and then another one until it stops getting 50,000 views, because that's the fastest way I'm going to grow the channel. Right. And I don't know if that sounds like a selfish answer, but like the videos are for growth. The live streams are for you guys. We don't make any money on these. I think like the average revenue we make from a live stream is $20, and we spend 2 hours on each live stream.
Yeah. Yeah. And I'm similar to that too. There are some videos so there's some videos that I'm like, I want to do this and I know it'll get like 500 views, and I'm good with that because I just want to do the video. And that's most of the content that I do. Some of it does really well and surprises me. A recent Palantir video, like I thought I'd get 3,000 views and it's like 10,000. Like, okay, I did it because I wanted to. And that's like 85, 90% of the videos. I never do a video that I don't want to do, but there's some that I, but this one will be okay. I'm not like super excited, but it's fine. But I know it'll get 10, 12, 13,000 views. Well,
Yeah.
It's giving something that you guys, or at least the algorithm is telling us that you guys want. And I'm like, I'm fine doing something where I'm like, I'm fine with sharing, but it's not my favorite thing, but you guys love it. I'll give you some of that. But the other side too, just to be transparent, I do make a little bit of money from this platform. It helps my family and our financial position. And I thank you guys very much for that. But that is part of the factor too. If like all things are equal, I'm like, I slightly prefer this video, but it's going to do terrible. And this one, I still like it, but maybe just not as much. And it's going to, help not keep the lights on. I mean, but give a little bit of extra comfort to my family. I will do that video.
Yeah, and like I think I would add 2 more things, because this is not my full-time job. This is not Roy's full-time job. I think the equation is different if you're talking to like Tanner or Amit or any of these guys who are like YouTube is their job. Because this is not mine nor Roy's full-time job, there's 2 extra considerations, and this is full transparency for you guys. Number 1 is, from an effort perspective, it takes roughly the same amount of effort to research, script, and talk about a video, regardless of the topic. Like I can make a Meta video or a BM&R video or a SoFi video or an Amazon video, and the amount of input is going to be roughly the same. But it's also discouraging when it's like I'm putting in hours for a certain video and it gets a fraction of the views of another video, depending on the topic. So that's the first thing. The second thing is, because it's not my full-time job, I only have a limited amount of time. And so let's say in the entirety of my week, I might have 6 hours, let's say, to allocate to making videos. Now, in that week, I can make 6 BM&R videos, 1 hour each, in terms of how long it's going to take me to make the script and edit and upload and all this other stuff. Or I can make 6 videos of random topics. But because I only have 6 hours, the opportunity cost is much larger, versus if I had YouTube full time, then yeah, I'd be here all day long talking about and making way more content and experimenting way more. And so the channel would be way more diverse in terms of what I talk about, because I have the time and the opportunity cost is not as strong. But if I only have 6 hours a week, then I want to focus on whatever gets the highest level of attention off that time.
Yeah. And even just to reiterate what you said earlier, Tevis, you also do some videos like Nebius, not because it's for the views. You know those will be terrible. You really care about the topic and you want to give the best quality, which is what you're really interested in. And those are always really interesting.
Yeah, the Nebius videos don't get that much, but I want to grow it as an audience because that is one of my bigger positions, right? And it's the second largest. So start doing shorts. Shorts are horrible. This is, you remember when I opened the TikTok and did more, this was the whole thought process, but like shorts will make you 0 money. And I've had shorts, that went viral or semi-viral, and I was like, oh my gosh, that's a lot of views, and it'll make you like 30 cents. It's not viable. So again, I think streams is not viable. I think this is also, I mean, if I'm being entirely honest with you guys, like this is part of the mental thought process around why you're seeing fewer and fewer collaborative live streams.
Okay,
I mean, what's that?
I see two comments that say you should quit your job and do this full time. First, is there a point where you'd be like, okay, I'm actually open to doing that? Not necessarily for a financial standpoint, but just in general. And B, if you don't mind sharing, what might make you hop that direction?
And
you don't have to answer.
Yeah, I'm gonna give a non-answer, but I think like at the point where I roughly double this channel is the point where I'll probably, because here's the problem, guys. Like if I quit, I quit. Like I'm out. Like I don't want to go back to working a corporate job, and it's pretty stressful to do that. I don't want to go back to it, right? I'm 31 and I look like I'm 41 because I run a small team of toddlers that I have to manage on a daily basis. I have a team of 35, dude. It's
and in the tech world, there's probably a lot that are younger than you.
Yeah, and like it's great. I interviewed somebody and he was like 55 or something for a role, and I'm like, why should I hire? And it's just like I'm like a 30-year-old, So it's very different. This is like my form of sort of relaxation, right, from my actual job. I would quit probably when the channel goes double, and even double from what I'm making right now or what the viewership is right now. It's like a fraction of what I actually make in my actual career. But like that would be the point where I'm like, okay, like it's not a money decision. It's like a peace of mind decision. And so I think if the growth of the channel keeps up, I think within a year, you could definitely see that happen. Now you could see it earlier, you could see it a little bit later, but rough math, around a year from now, I should have the channel to be close to where Tanner's channel is right now. And even without, a course or partnerships or any of these stuff, like just from the ad revenue, I think I should be able to make enough to just live a quiet, peaceful life in Europe and move out of Canada. And yeah.
AKA my vacation home.
That's just full transparency with you guys.
Yeah. That's awesome.
So, but like, again, I think like the live streams, and I want to reiterate, like the live streams are not a money decision. I can fully show you the analytics of our live streams. We make, I think we've done about 160 bootleg episodes, and I think the average is $23 per episode from ad revenue.
Yeah, I think lower for me, but yeah, and that's honestly like why 90% of the reason why I do this is I enjoy it. I enjoy interacting, of course, Tevis, Tanner a bit, and all the other guys too. Like it's just awesome. So, but there is a financial component as well. Just I've hit a certain level, and I'm like, hey, it helps my family. I feel good about that. So, and you guys should too when you hit your financial goals or when things are really working well for you. But yeah, the other part too is just having a community. Like preparing for videos really helps me go at a deeper level than I maybe would on my own, where I'd maybe shortcut something. I don't do that with the research that I do when I put it out for you guys. But also like comments that, would people push back and say, well, what about this? Have you thought of this? Sometimes I'm like, I didn't consider that. That's an interesting thought. I might have to rethink that. Helps me so much through the thought process. I think makes me a better investor. So, and then just having the support, which today is a nothing burger day, but like Liberation Day stuff, it's like, it is scary when your portfolio is just relentlessly red and you're like, oh man, I can retire over in Europe to I can retire, but I live, in a meager cottage to I have to work till I'm 85 at Walmart. That's scary when that happens over like 3 weeks. So it's great to have a community.
Yeah, I think that's a good place for us to wrap. And I will be likely going live a little bit later on at 9 p.m. or 9:30 p.m. with Steve. So I just got to run and get some food between now and then I'll probably be going live in just a little bit. We never got into Zeta after Stockton. No, we did not. Maybe we'll end on that. Roy, any interest in getting into Zeta after what you heard Nick say?
I don't have much time at all until after the 8th of February, but after that, I hope to take a closer look, especially at that 1P data, which seems to be the source of their moat. I'm not sure on that. Wealthmatica clarified a few things here yesterday, I believe. Good post. I think I retweeted it, so you can read it there. But it's interesting. If the moat is as Wealthmatica says, which I'm skeptical on, I'll have to think about getting in because the numbers speak for themselves, and the quality of that leadership team speaks for itself. So if the moat is true and the valuation doesn't look bad at all, yeah. I would be surprised though. I would say that's maybe a 15% chance of happening where I see the strength of that moat.
Yeah, this is a good question. Do we get extra content by becoming a channel member? So you do. You get. We do a special live stream every single week for channel members, and generally speaking, that live stream is 30 minutes. Sometimes it ends up being longer than the actual show, and we post that. That's actually live to members every single Friday. And I also try to post some extra content around my portfolio, moves I'm making, this kind of stuff. But that's only when and if time permits. But yeah, that would probably be the extent of the content. So you're guaranteed to have at least 4 to 5 extra pieces of content per month at the minimum for channel, plus the entire library of other content that we've made for members. So.
Yeah, mine is a little bit worse than Tevis's because I don't do anything beyond the after hours right now. After the dissertation is done, and hopefully that'll be in the next few months, there is something that I've been thinking about, so I may do that. But it's just gonna, the way I view the membership is don't bank on getting anything extra. I do think that some of the after hours that we have are quite silly, and some of them are this is the best chat ever. But they're always fun. But it's more of just a thank you and a way of supporting the channel, honestly. So even though I hope to do a little bit more with it.
Where in Europe is your retirement plan? I think you know where. I think you have a good idea where, but I will let you guys all know if and when that does come true. It's
Greenland.
Top of mind right now. Yeah, it's not Greenland. You got to get away from cold countries, man. Anyways, thank you so much for watching, everybody. This has been the Bootleg Weekly. We'll be back 6 p.m. Next week on Tuesday. Roy, do you own a horse?
Nay.
Thank you so much. See you next time. Goodbye.